Hey there, traders, and welcome back for episode number 150 from the Stock Bandit. I'm sure glad that you've joined me for this episode, and hope you've had a great weekend and you're ready for a brand new week of trading. Now, we've got obviously a holiday on Monday, but banks are closed, the market is still open, and you and I've got to still be prepared for anything that comes our way. So let's take a look at the indices here. We'll eyeball some key levels that we know are going to influence how individual stocks move. So last week we saw a positive note to end the week as the indices each kind of stretched their legs a little bit to reach new recovery highs off not only these August lows but also the July lows. So the uptrend is still intact, and in the short term we've spent some time here in a bit of an area of indecision, and that's starting to get resolved here to the upside with Friday's breakouts across the board. So that doesn't mean that it's going to be smooth sailing just straight up though, because we are coming into some important resistance areas. For the NASDAQ, obviously we filled this gap right in here, but we've got two zones to pay very close attention to. This mid-May bounce high after the flash crash low was put in early May. Obviously we rebounded back up. We didn't quite reclaim this breakdown area. This mid-May bounce high right here is at the 2434 level, and then just overhead is right here, this breakdown zone from 2450. So we've got 1.5% to this first area, about 2% to the next area from current prices. So the NASDAQ could move a little bit higher, and in fact it could just blow right through these levels and not even respect them. However, as technical traders, we've got to consider some zones where there might be some sellers, and we know that's where some selling has kicked in the past. Once 2450 was broken, that sparked this move to the downside, and then we saw a rebound up to 2434 where more selling kicked in and another wave of declines arrived. So be very careful here as we start to edge up into these areas, but for now this index is no longer overbought, and we've put in some pretty good rest here. We have yet to see a good pullback, but we have put in some rest here, and we certainly could turn higher from these levels, and it looks like this index is trying to with Friday's move through short-term resistance. For the S&P 500, this index did break out through 1150 last week. That was some short-term resistance, which we had yet to see a close above until last week. And then we also pulled back and tested that area on Thursday with a low of 1151. Then Friday, of course, we turned higher. Volume certainly could have been better, but we did finish at a new recovery high, 1165. So we're well off of this 1040 area from the August lows, and we're now coming into this mid-May bounce high for the S&P, 1173. That's just a few points away, and then beyond that we've got 1180 as the breakdown zone here from that April trading range, and of course that sparked the sell-off into the May 6th flash crash. So we're coming into some very important zones here for the S&P as well. Let's take note of the new highs and the fact that this trend is continuing, yet it may have some reason to kind of slow down as we're coming into some important zones where sellers have been in the past. The Russell just kind of continues to channel higher here. It's working itself steadily higher here in recent weeks, has not gotten extended in any direction, and that's really perpetuated this uptrend here as the small caps just kind of continue to rebuild and rebound. So 587 was the big double bottom low here for this index. It's now working its way back up. The next logical spot here is the mid-May bounce high, and that of course kind of coincides with this breakdown zone from late April, early May, which is about the 719 zone. So we've got some room to move higher up into that area, but that's probably the next logical spot to see some resistance arrive for the Russell. And finally, the Dow. This index is acting pretty well. It's now getting up into this trading range that it spent much of April in, between 10,965 and 11,258. So it did reclaim 11,000 on Friday on a closing basis, and that's positive for the Main Street investor who sees another round number at 11,000 get reclaimed, feeling a little bit richer out there. But for you and I as traders, it's just something to take note of, that the Dow is moving up into this big congestion area from the springtime, and that may pose some resistance. So let's keep an open mind out there in the days ahead. be ready for anything that comes your way, whether it's trades on the long side as this uptrend may happen to continue, or possible reversals to the downside as we've seen a lot of recent market leaders struggle and falter in the past week with major rollovers in a lot of momentum stocks, and they may be sending some kind of a signal. We simply don't know yet. The indices are still acting pretty good here though, so there's no reason yet on a technical basis for the indices to get really concerned. We simply just have to be aware of anything that may come our way, especially now that earnings season is right here upon us. So thanks for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.